Hi everyone. Today, many people are interested in investments. Mainly, the stock market and share market investments are increasing on a large scale, right? But many people do not know how to invest and how to choose the stocks or shares and end up making losses instead of profits, right? So, in this series of tutorial, we shall learn slowly about the stock market. Firstly, starting with what is stock market and who regulates the stock market, and then going to high level market scenarios. Okay, so without any delay, let us start this video. In this video, we'll learn about what are shares and why do companies list their shares and how those companies list their shares, and finally we shall see about what is SEBI. Okay, starting with what are shares. Shares are nothing but the part of a company's value. Okay, for example, consider a person has bought, let's say, some 200 shares in any particular company, which amount to the 2% of the value of that particular company. Okay, so in this case, this person invests the value, that is the amount proportional to that 200 shares, and he takes the ownership of the 2% of that company's value. Okay, this is how the shares work. Now let's see why actually do companies list their shares. What's their advantage in listing the shares to the public? Okay, here a company and the representatives of this particular company are planning to expand their business or to open any new branches or to shift to any particular sector. Okay, and in this case they are short of their investment. In that particular case, they enlist the shares onto the market so that they can get investment from the public like you and me, so that they can expand their business, and with the profits we also get the share. Okay, and the profits that particular company gets, the public also have their share with respect to the proportion of the owning of the shares. Okay, so this is the reason why the companies enlist their shares into the market. Okay, now let's see how do companies list their shares onto the market. Okay, firstly, not all the companies have the right to enlist their shares onto the market. The SEBI has laid a few rules and regulations for that, and those companies which lay their shares onto the market for the first time, that shares are called initial public offerings. Okay, now let us see what is SEBI. Firstly, SEBI stands for Security and Exchange Board of India. Okay, it is the securities market regulator. In order to oversee any fraudulent transactions and activities made by any of the parties like the companies, the investors, traders and brokers and any other persons. Okay, so the share market or stock market is regulated by SEBI in India. Okay, similarly we have other regulators like Security Exchange Commission SEC for US markets, and Monetary Authority of Singapore for Singapore markets, and similarly European Securities and Markets Authority for Europe. Okay, in this video we are done with all the four topics: what are shares, why companies list their shares, and how do companies list their shares, and finally what is SEBI and what's the purpose of SEBI, right? So we are done with today's video, and in the next video we shall learn about the further topics of the stock market. Until then, stay happy, stay safe, and if you like this video, like it, and to stay updated, subscribe it and click the bell icon. Okay? Thank you. Bye. Have a nice day.